Welcome to TradeSpoon. My name is Lakarpal. I'm CEO and founder of TradeSpoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Joseph, welcome. Okay, let's give people another minute or so, and then we can start. So do me a favor, type in yes if you can hear me. I want to make sure that the audio works. Joseph, Renata, how are you? Let me know if you guys can hear me. We'll start right away. Screen is sharing. Should be able to hear me. Type in if you can hear me, and then we'll start. I'm not sure why recording stopped. That's interesting, but okay. So some people joined, and I think I forgot to press the recording button. Maybe just stop recording. But anyway, again, welcome to TradeSpoon. This is our weekly recap. So main events this week was Micron. Again, Micron pulled back after the earnings, but had strong earnings, quadrupled their revenue. They don't see the end in sight for the demand of AI. And you can see Micron is still going higher, and semiconductors in general pulled back, but are still in strong trend and reconcile. Memory stocks are doing better, right? DRAM is doing better, still in strong uptrend. But you can see that the prices are going higher, and there is inflation due to AI, whether it's utility prices and my electrical bill is out of control, or now that you're going to buy Apple laptop, or if you're going to buy Apple phone next time, you're probably going to pay at least 20% more, right? So you have a sharp pullback in Apple, sharp pull in Google, who's buying these building these data center. They have to pay more. Google is sitting basically gave up all of its gain for this year, and Microsoft, it's the same thing. Meta, right? All of the hyperscalers are in sharp pullback, give up all of their gains for 2026, some of them even for 2025, with the idea that A, they're spending billions of dollars, B, there are trillions of dollars in market evaluations, there's not really buyers left, and C, if Fed rate hikes rates, then they'll have a hard time refinancing their debt. So we've heard this story since last October in software names, right, like IGV, and now it's being translated to the hyperscalers, Magnificent Seven. So earnings season going to start, right? We have 4th of July. Earnings season going to start. We'll see what happens. Positive news are 2-year yield give up almost all of the gains from the press conference last week, FOMC press conference. That's positive. A lot of bears would point like 2-year is going higher. Fed is going to raise rates. I mean, ideally we want it to be below 4%, but I'll take that. Dollar also, that's a bear argument. Dollar is in strong uptrend since the beginning of February. That's bearish for the market. 10-year yield pullback. below 450 continues to roll over. So 10-year looks great below 50-day moving average. And you start seeing yield curve steepening. We had flattening after the press conference in the past few sessions. It's steepening. Dollars pulling back. So that's great, right? That's great. Crude oil 69 below 70 print. That's also great and gives a break to the. So we'll see. We do have end of the quarter rebalancing. Russell 2000 once a year gets rebalanced. So there is a lot of volatility underneath the hood. But even on ETF level, not only on sector level, but on ETF level, you see these wide moves in QQQ, the semiconductors. We've been trading in this wide range. I mean, this is what, 5-6% range, almost on daily basis, weekly basis, 6% range, actually more. Yeah, 6%, 7% range. And I think that volatility will stay next week for sure. And then after unemployment data, we'll see. But market is going to be more sensitive to employment data and inflation data. So this is something to keep in mind. We talked about Citigroup. So I did close the Citigroup spread this week. I still have a position in Citigroup. So Citigroup was a good trade. It's been a good trade in general. Right, I've been trading stock. I think I closed stock. I closed option, then I bought option, closed option. Still have July 2nd, 140, 145. Citigroup did pull back. I would be a buyer into pullback, maybe at 136 or 132. I would consider buying Citigroup. We are going into the earnings, right? July 15, 14 is the earnings. So that was a good trade. And if you look at the watch list, retail stocks had a good week, almost at 2026 high. Energy oversold because of the crude oil prices and Middle East. Consumer discretionary is weak. Tesla's of the world is weak. Healthcare catching a bit, so healthcare strong rebound from these oversold conditions. Consumer staples, strong rebound. That's good. XLK, similar to QQQ. Industrial had a good broke out, right? Above 180, above 177. Banks are doing better. Home builders are doing better. Biotech broke out. Biotech vertically moving higher. REITs are catching a bit and at 26 high. So, and there's more room to run, right? If you look at the percentage of stocks above 20-day moving average, and only 50% above 20-day moving average. So there's plenty of room to go higher. We're off the lows, April, May lows. So, I think it will depend on unemployment, reaction to unemployment data, and then start of the earnings season. Assuming earnings season is strong and inflation is contained and going lower, right? Just like following the energy price. Most of the inflation came from higher energy prices. So I assume we have half of the June where there's oil prices down. So hopefully either August or September, you're going to see a CPI and PPI print that's pointing in the right direction. All right, any questions? So on TradeSpoon, how do we help? Stock Forecast Toolbox. I like Stock Forecast Toolbox. It gives you model prediction 10-day, 1 hour, 6 months. Company Screener, you can see every month, the first of the month, it shows you which sectors, some of the automobiles, the General Motors. I wasn't paying attention. General Motors, I think. Yeah, General Motors is doing decent. How's Ford doing? Ford not so well. Sectors strong after banking, right? Model did a good job predicting banking. Computer hardware, right? Your STX, that's doing well. Electronics, right? Semiconductors, kind of energy. This is all that the model predicted. You can see on the first of every month what the model thinks in terms of which sectors can outperform. You can have your watch list, right? Today we had signals on some of the, Healthcare, like TMO, that's an uptrend. We talked about General Electric, PG, Skyward, not Skyward, but Stanley Black & Decker, right? The strong uptrend and signals. So you have Stock Forecast Toolbox. You can subscribe for. We talked about active trader, weekly trader, and monthly trader, where you can, see signals on daily basis, right? You can also see the signals on weekly basis. Right? Today, United Airlines, General Electric. If you look at the weekly trader, you can trade in both stock and options, right? Then you have your option trades. Citigroup, Pool, all in strong uptrend. So these are the signals. These are the tools to analyze signals. We have seasonality, right? If you can look at our seasonal chart, you can actually see 92% correlation, very high correlation. Basically, in the past few years, May has been good, June, July has been good. End of July, going August or September, you do have these bigger pullbacks. But right now, it's 92% correlation. So that's good. And you can see, like probability chart to show you what range it's trading. So basically, says 76% we're going to be between 720 and 750, right? So that's good. These are some of the tools. And if you want to follow the trades, Robo Investor is a stock trading premium portfolio this week. Citigroup was the trade. You can actually, I already exited out, but you can see the trades, right? I bought it at the market on Monday and then closed it today. And, I'm out of this trade. All right. Any other questions? All right. If there are no other questions, then that's all I have. Consider we did do a recording. Where is it? Here. So if you go to, and I disclosed we do have marketing relationship with Avantgarde. You can go into use this link, and if you want to learn about Iron Condor, I just did a presentation on Iron Condor. So if you want to learn more complicated option strategies, or there's archives under education section, then I encourage you to look at them. So I'm going to paste this here. Right. So check out Avantgarde. You can sign up. They have letter of direction business. We're offering 65 cents a contract. You've seen these promos here. If you're paying more, I would consider opening an account at AGT. And obviously, if you have multiple newsletters, you can auto trade them at Avantgarde. Or even if you just want to segregate your strategies among different accounts, because you don't want to trade all in one account. Otherwise, it's hard to tell which strategy works and which does not. That is all I have for today. Joseph, thank you. Andre, thank you. Glenn, Renata, thank you for joining. I'll see you guys next week, same time, same place. Thank you very much, and have a great day.